when you think about the most important stock on planet Earth, I mean, is this the bellwether? Do we sort of throw all the Fed concerns and talk and print that we're going to get from Fed minutes out the window?
This is clearly the key catalyst, at least for today and maybe this week. But I think, look, this is earnings after the close today. It's really about whether or not this AI story has more legs in terms of the momentum that we've seen in the market. I think one of the things that we're looking at, though, is we can talk about the Magnificent Seven, we can talk about the concentration in market breadth, but it has been backed up by delivering superior earnings. And when you have earnings growth that's in the ballpark of 25% plus, it is something that actually compels the valuations that we see and actually continued inflows into these companies.
And some might say, actually, Nvidia remarkably cheap in comparison to where we've seen in terms of the run-up of the overall share price. But the spillover effects here, the fact that people are looking out for anything that has AI in its name, many have felt that it's kind of a rerun of crypto in some way. But are they justified from your perspective, more broadly on a macro perspective, what productivity is going to be borne out for these companies?
I think when we look at these very large companies that have performed quite well, we have to remember, just going back to 2022, they did not perform well at all. So you were saying quite the opposite story where you saw declines of 50, 60+%. Now looking at this, like I said, it is backed up by earnings. You're looking at the Magnificent Seven represent close to 20% of the earnings contribution of the US equity market. We're only going back to 2017, it was 5%. So they have delivered an earnings growth. I do think, though, as an investor, it's important to have exposure here, but it's also important to have exposure as to who are the beneficiaries. The play when it comes to the technology and the enablers, very clear. I think the adopters is where investors are really looking for gains within 2024.
Okay, so dig into that. Is it going for specific names in healthcare, specific names in industry that have managed to talk up a good game in AI, or do you have to see the proof in the pudding before you start allocating money?
I think it's a little bit of a show me story in 2024. I think, when you just look at AI in terms of the number of times it's been mentioned in earnings calls, it's come down. I think like last quarter it was 6,000 times and now it's about 2,000. But I do think that when you look at sectors that stand to benefit from this. I know cybersecurity very much in the news based on last night's earnings, but you look at something like cybersecurity and you say, okay, comparing the run-up of that sector versus the broader AI Magnificent Seven, there's a comparative difference there and a valuation difference. Actually, on a forward PE basis, you're looking at valuations that we haven't seen since 2020 within that sector. And when I think of the applications and the adopters of Gen AI, not only in an area with cybersecurity does that increase the total addressable market and the demand side of the equation, but there are real productivity gains when it comes to what used to take a security analyst hours to do can come down to minutes. And we're going to see those productivity gains in 2024.
Make that macro for us. There has been a perspective that the Fed is going to start maybe talking about the productivity gains that AI can bring more broadly to the US labor force, and the fact that we do have a tight labor force, people still wanting to be hired, we do seem to see growth within it. Will we see productivity gains, do you think, more broadly in a macro perspective?
I think from a macro perspective, we have to go back to, even though we've seen volatility in the inflation print, we have to go back to what we know is true and where we're going to see flows from an investing standpoint. So what do we know to be true right now? We know that there's $6 trillion sitting on the sidelines in money market funds. That has increased by $1.5 trillion since the Fed started its hiking cycle. We know that we're at peak Fed funds rates. The question is, when does the Fed start cutting? I don't think there's too many arguments that the Fed would resume a hiking cycle. Inflation, we knew it was going to be a bumpy ride down to the 2% target. We see a path maybe down to 2.5% by the end of this year, and earnings have troughed. And I think that's an important thing when we look at this broadening, not only just because of inflation coming down, rates coming down, cash on the sidelines. Earnings troughed in Q3 of last year. And now we're seeing more sectors turn to profitability. So you have a profitability argument in addition to then productivity gains.
And it might be an argument, therefore, when you come back to your theme of cyber, of buying on weakness. What we love about having you on shows across our network is the themes that you bring. Where else are you seeing sort of forces that cannot be argued with, even in a Federal Reserve that potentially doesn't start cutting as soon as we anticipate.
Another area that we love, and you're probably going to laugh because you've heard me talk about this for years, is longevity and investing in.
It's very tech. It really works for this show.
It really does. It kind of does work. So we'll bring it full circle in terms of AI gains there as well. But longevity is another area that was left behind last year. So when you look at healthcare, it was really exclusively about GLP-1 drugs until the last 2 months of the year. And then biotech started to get a little bit of a bid, med tech started to get a little bit of a bid, and life sciences. And so this is the same type of argument when you think of productivity gains, when you think of enhancements, when you think of what technology can do in bringing down the cost of healthcare. There are a lot of compelling valuation opportunities, both for the short term, but also for the long term.